Hey guys, what's up? This is Francisco, back in the channel at Valareso Capital. For this weekly market update, we're gonna go through some very important charts. We're gonna go through a little bit of the outlook for the first week of the new year 2023 in January. We're gonna cover some very important charts, so make sure to stick all the way to the end if you wanna understand what is the indicators in my chart telling me about what we can expect for this upcoming week. So once again, welcome to the channel, guys. If you haven't done that already, make sure to like and subscribe. That way you can support the channel, and also remember to share this information with some other fellow traders or investors so that they can also use this information as an asset for their trading analysis. So we're gonna jump right into the charts. First of all, I want to wish you, all of you guys, a happy new year. I'm sure that most of us are ready to move on from 2022. It was one of the most extended bear markets that we have seen in the last 10 years. So of course, we are not yet out of the woods of the bear market, but we're starting to see some of the things coming together, and we're gonna cover a lot of those things right now in this video. So let's get ready for it. Let me just pop my chart right here. Let me just make myself a little bit smaller so that we can see the information in the chart. Okay, so the first thing that I want to cover here in this video is the chart that I have here on my screen. So this chart, what covers is the effective yield of the interest rates. This is measured by Bank of America, and as you can see, what I have here is actually a line chart. I cannot plug into a candlestick or a bar chart in this instrument, so we're gonna have to use the line chart. The difference between the line chart and a candlestick or a bar chart is that the line chart only shows the closing prices of the day. So now that we understand what a line chart is, let's move into what I'm actually looking at the chart. Now, first of all, we have to understand that the effective yield tends to have a really close correlation with the stock market, and actually tends to move in the opposite way. So what that means basically is when this starts to go up, then the market starts to see a slight pullback or correction. And when this starts to go down, then we usually see a little bit of more rally in the market, and also on some of the names that are trading in the market. So what is happening here? You can see right here that after we had a pullback into that 50 daily moving average, then we have a rally all the way into that 30-day moving average, which is the pink line in my charts. You can see that this got rejected. This happened basically right around November, and then after that rejection of this level right here, the 30-day daily moving average, we saw a correction in the effective yield of the interest rates. Yeah, so you can see that the trend oscillator was below zero, and you can see that the price was trending to the downside. You can see that this was pretty easy market structure to see, right? We were seeing constantly lower highs and lower lows, right? But what happened right here, and this is something very important to understand about price structure. As soon as we make this lower low right here, we actually break this lower high, and we actually make a higher high. So the moment that we make a higher high, then we make a higher low, and that basically changed the structure. So a difference, right? This was a lower high, lower high, lower high, lower low, lower low, lower low, and then that actually just changed it basically last week. So when we had that change in market structure in the in the effective yield of the interest rates, we have to pay attention, because what this is actually telling us is that we most likely are going to see a continuation to the upside in this instrument. So what is going to be the expectation and the level that I'm going to share with you? The level that I'm going to share with you is basically 8.57. Most importantly, as long as price continues to trend above that 21 exponential moving average and that 30-day daily moving average, I'm expecting higher prices in this instrument right here. And that means that I'm going to be expecting lower prices in the indexes. Until this changes, I'm going to expect a deeper correction in the indexes, and probably we're going to see a little bit more of a sell-off into the beginning of January. So that's the first thing that I want to share with you. The second thing that I want to share with you is going to be the indicator, which is the net highs and the net lows. You can see right here, and we mentioned this before it happened, we were mentioning that even though the market was consolidating in this pattern, we were seeing consistent net lows in comparison to the net highs. And of course, as soon as the market breaks to the downside, we were seeing that confirmation in this indicator, meaning that participants in the market were willing to sell stocks into new 52-week lows rather than buying stocks into their 52-week highs. So this was also a very important indicator to understand what was happening under the hood of the Nasdaq Composite. So we are clearly seeing distribution in the market. We're clearly seeing an effective yield that is trying to move higher. So what is the market telling us, right? The market telling us, at least these two indicators, that we're probably going to see a little bit of more downside. Now let's jump into the other indicators that we have so that we can understand a little bit better what is actually happening. So the first graph that I want to show you is going to be the VIX futures. Why do I want to show you the VIX futures? And let me just hide this alert right here so that we can have a cleaner chart. The first thing that I want to show you here is that the VIX futures are starting to base. So when the VIX futures are starting to base, what is that actually telling us? That is actually telling us that the probability that we're gonna see a spike in the VIX is actually becoming a high probability for the beginning of the year. So what is actually happening? You can see right here that we had a sell signal all the way back in October 26 to be precise. We have a trend oscillator that was trending below that moving average in the trend oscillator, and then of course we have a confirmation in the price. We were making lower highs and we were making lower lows. So that's a pretty easy pattern to understand in terms of market structure. But what happened? As soon as we broke above this level, we actually make a higher high. The moment that we make a higher high, that means that we are changing the structure. And as soon as that happened, we can see that these higher lows are starting to give us confirmation that the VIX futures are starting to change the trend. Now we have to understand that we might see a little bit of a pullback here in the VIX futures all the way to the 0618 level, measured from this low all the way to this high here. But we have to understand that the 30, right, you can see that the 30 daily moving average is starting to curl to the upside. When that starts to happen, we have to understand that the price action in this volatility instrument is starting to change the pattern. Now, what does that mean to the market? That means to the market that if this squeeze that we have right here is able to fire to the upside, we're probably going to see a very significant move in the VIX future. Therefore, we're going to see a pretty significant move in the VIX, and we're going to also see a pretty significant move in the UVXY. Now, let me show you what I'm seeing in the UVXY, because I also think that that's very substantial. What we're seeing in the UVXY, and we can see this indicator right here, we had a sell signal also all the way back into October 25th. Right, we have a squeeze. We had a squeeze. The squeeze fired to the downside. We had a pretty substantial move to the downside, and you can see that we had confirmation also with the trend oscillator. The trend oscillator was also making lower highs and lower lows. What does that mean? That means that we were making lower highs and lower lows in the price, but that was also confirmed by the trend oscillator, meaning that was also confirmed by momentum, meaning that there was selling supporting the selling, right? That means that this move was actually a true move. So what is actually happening right now? Let me just zoom in a little bit here so that you can understand. What is happening here is that we are continuing to see, right? We continue to see lower highs and lower lows in price. However, you can see that the trend oscillator is starting to make higher lows. What does that mean? That means that after the sell-off that we saw in the UVXY, now the momentum is not supporting the constant moving in price. That means that under the surface, this selling is getting exhausted. When the selling is getting exhausted, we have to be ready to accept that the trend that we saw is about to end, or we're probably at least gonna see some really substantial consolidation, aka we're gonna see some chop. So my expectation is that if we happen to see the price of the UVXY break above the moving averages that have been holding for a while, which is the 21 exponential moving average and the 30-day moving average, is that we're gonna see a change in the trend, meaning that we're going to start to see higher highs and higher lows in the UVXY, and therefore that's going to change a lot of the things that we're going to see in the indexes. So now that we have that understanding in mind, now that we have the understanding of the effective yield, now we have the understanding of the net lows and the net highs, we have the understanding of the VIX futures and the UVXY. Now let's just take a look at the SPY so that we see if the price in the SPY is actually confirming what we are starting to analyze in those instruments. So here is the price of the SPY, and the first thing that I want you guys to look at is that the SPY, and let me just do this really quickly. Let me just hide the drawings so that we can just see plain price action in the SPY. What is the SPY telling us? The SPY is telling us that it's trading below all key moving averages. When we're trading below all key moving averages, what is the path of least resistance? That's actually a pretty easy question. The path of least resistance is going to be to the downside, right? So even though you might want to look for bullish setups and everything, you have to understand that somewhere around 80% of the stocks in the market just follow the general market, and that general market is going to be the SPY. So when the SPY is telling us that the path of least resistance is to the downside, just by the fact that it's trading below all key moving averages, we have to listen and we have to adapt, right? So right here, when we were seeing a little bit of continuation in the SPY, we were seeing that the SPY was holding the 21 exponential moving average and holding above the key moving averages. But right now we're seeing the complete opposite. We're seeing that the SPY broke below the 30-day, and then you can see that the SPY found resistance at the 50 daily moving average, found a little bit of resistance at the 8 exponential moving average, and now, even though there's the probability that we're going to see a little bit of a break above this base, I'm expecting this level right here, and this is the level that I'm going to share with you. The level is going to be 390. Between 388 and 392, that's going to be 390. That's going to be the level that I'm going to be watching. And let me just bring my drawings back. You can see right here that the level of 391.64 was previous support, and that's the level that I'm expecting to be resistance at this moment. So that's everything that we need to know about this video, guys. There's no need to extend this video further than the fact that we're starting to receive some really important messages from the indicators that I just showed you, and we have some really clear picture and structure from the SPY. So basically, just let's summarize the video. The expectation is that the SPY is going to rally. If we happen to see a rally, is most probably going to rally into resistance. That resistance is going to be around 390. And the expectation is that we're going to find resistance around these levels right here. And then the probabilities tell us that if we happen to see a little bit of a continuation to the upside into those levels, that's actually going to be an opportunity to short that move and continue to look for lower prices in the indexes. How low? Of course, we don't know that, because no one knows that, but we just have to move with the probabilities, and we just have to follow the path of the least resistance, and that path for now is gonna be to the downside. So I think that's everything that we need to cover in this video, guys. I can go through a lot of the other sectors in the market, but there's no need to do that. There's actually no need to do that, because as long as the SPY is trading below the key MAs, the probability of bullish setups working is really low. And you don't want to put yourself in that position, because you just want to flow with the market. You just want to move with the market, because if you adapt to the ebbs and flows of the market, you're gonna make money, because it's actually that easy. So thank you so much, guys, for watching. I think that's everything that we need to cover in this video. We don't have to go deeper into anything else. With this understanding, you are already putting yourself in a winning position. So once again, guys, Happy New Year. I'm sure that this 2023 is going to be an amazing year. It doesn't matter what is actually going to happen with the market, because as we know, traders, we just have to adapt to the ebbs and flows. We just have to find opportunity, because there's always opportunity in the market, as long as you follow your system and you have basically a proven edge, and you just have to respect those levels. So once again, thank you guys. Remember to like and subscribe, and also if you haven't done that already, also follow me on my Twitter account at Valareso Capital. I see you there, guys. Thank you. Bye bye.